Happy Friday, everybody. I'm Jeff Hirsch, editor-in-chief of the Stock Traders Almanac, and this is WealthWise on Biz Talk Today TV. Today's featured guest is one of my favorite people, my good friend Danny Riley, a.k.a. Mr. Top Step, D-Boy. Danny's old school from the Chicago trading pits. I'll bring Danny on in a few minutes. Last night, we issued a few new international ETF buys in the newsletter to subscribers. So if you want to get that whole report, you just go over to stocktradersalmanac.com and click on last night's issue. There'll be a link to a free trial. You also have access to my monthly members-only webinar, which we aired a couple of days ago. So, yeah, pretty happy day for the markets. Looks like, back at 6,000 for the S&P, more bullish vibes there. But June is the end of the best 8 months. NASDAQ's best 8 months. And the MACD that we used for our best 6 months sell signal, best 8 months for NASDAQ sell signal, is close to resetting the positive. It had flipped a little negative just before the month turned. And then when it goes positive again, and we get another negative crossover, we'll get our seasonal sell signal for NASDAQ. We're looking at some of the June and post-election year seasonals. Looks like we may stall here and consolidate the big May gains here in June before we take off on the NASDAQ Christmas in July mid-year rally and set up a little correction in Q3, very typical, before we get into a Q4 rally. So go over to stocktradersalmanac.com, check out the free trial, get my new international ETF buys and all my latest picks and the market outlook. And then we're going to find out what Danny's thinking. So, D-Boy, thanks for coming on. Let me give you a little proper introduction. Danny's the owner of topstep.com. He started as a runner a long time ago in the grain room, back when you were 18 years old. He moved to the bond pits. In 85, he started what would become the single largest S&P index operation on the floor of the CBOT. He did lots of business with the banks, hedge funds, prop firms, ran the UBS program trading business for 10 years. And of course, he worked with the venerable Marty Schwartz, the Pitbull, and still works with him. I hear stories to this day for the last 35 years or so. So, Danny, after working on the Chicago trading floors and the pits for about 4 decades, he created this Mr. Top Step to get this real pit action feeling, and where investors and traders can interact with one another in real time, checking on levels and volume and market flows, and they can access his market imbalance meter, which we'll discuss in a little bit, about how much money is building up at the end of the day. So he'll explain that. And he does his opening print, which I read every morning. Sometimes I get the honor of being in there. It's his market observations. It's real good feel for the trading day and some of the action that he experienced. So I first met you in 2012.
Yep.
If you remember, you had reached out to me over LinkedIn. See how hip we were back then? We were doing LinkedIn.
Right. Do they use LinkedIn anymore?
It's actually coming around. It's actually quite a place. It's getting some traction. It's really becoming a platform that we use. We use it here with Crosscheck Media, and also I find I got a lot of action on there. So
yeah.
You had messaged me, I messaged you back, and then we connected. And I remember coming out to see you back in 2012 when my little book of stock market cycles came out.
Right. Yeah.
I think the book came out in August, but I think it was Christmas time because you had your office party.
Yeah, it was
still on the pit. Yeah,
that was a little green book. Right.
And then you want to tell them how I almost got filled with an S&P 500 big contract?
Yeah. Well, I mean, Jeff, I was, unlike a lot of people when they would give tours on the floor, we would actually get into the pit, or we would walk by a pit. We'd have traders ask, where you could ask questions, and Santelli was there, remember? And
I did an interview with him.
Yeah. And it was more of a live action kind of thing when you were on the floor, especially if you got to go in the S&P pit like you did. And when we walked in there, we were talking, and you're not supposed to bring the public into the S&P pit, but you and I were in there, and I remember they were buying and selling, and you put your hands up, and I thought, oh my God, Jeff's going to make a trade.
I think I was asking you with all the stuff up on the wall, like what all those things meant up there, all the numbers. You were explaining to me all of the information there. We checked out, I think it was one of the grain pits. There was something that had a lot of action. It was corn or something.
Yeah. Well, I think it was after the Board of Trade, or the Merc bought the Board of Trade, and we moved over to did we move over to, was that during the move from the Board of Trade over to the Board?
Before you were still at the Board of Trade, before you went over to the
Yeah.
CME. And I think I came out again there. But, we've spent a lot of time over the years talking about the markets, comparing notes. And I've, been privileged to your gracious hospitality down there in Florida. You were pretty cool over COVID. If you remember, we came down and it was my son's 18th, and you lent us your street legal golf cart because there was nothing else to do. So we could, we could do something. Boys will always remember that.
Yeah. Well, the kids were great. But yeah, when I look back on my days on the floor, I was thinking about what to kind of talk about a little bit. And I think that it really was one of those places where a guy like me, who got out of high school, didn't go to college. I mean, my brothers and sisters got to go. And
you were the oldest, right?
Pardon me?
Were you the oldest?
No, I was, it was 6 girls and 4 boys. I was the youngest boy, and I've got 3 younger sisters. So Irish Catholic, of course. And I always said that I think most of these kids were probably, my mom probably had most of these kids when she was at the country club having a few cocktails and came home. There was no birth control amongst those people. But anyways, back to the stories about the floor. I knew really what had happened, Jeff, was I was working for my dad's company in Chicago, and it was called Riley Printing Company. And I think we've talked about that.
Yeah.
And financially, my dad wasn't set to send me to college, and I wasn't going to do that, put him in more debt. And I was in a local bar in a little place outside called Forest Park, Illinois, right outside of Chicago. And with all our guys at the bar and everybody muscling up. And the girl behind the bar, her name was Mary Claire Kane. And she said, Danny, what's up? And I said, Mary Claire, I said, I work at my dad's company. I got a paycheck here. I wanted to go to college. And I said, I got $75 paycheck or something, whatever it was. And I said, I'll probably spend it all in here tonight, And she said, well, I run a company on the Board of Trade floor. Have you ever heard of that? And I said, sure. My dad made a loan to a guy that owned a clearing firm there. And my brother worked at E.F. Hutton on the floor of the Board of Trade. So I was pretty acclimated to kind of knowing about what it was. I didn't work there, though. But anyway, she said, look, if you want a job, you show up at 8:30 in the morning on Monday, and I'll sign you on. And that's what she did. I came onto the floor, and right away, I knew it fit my personality completely. The guys in the pits, and they're pushing and shoving, and they're yelling in each other's faces. And,
Well, what about the math, though?
What's that?
The math.
Yeah.
In your head.
Yeah. Well, the math wasn't really so much back then. I was just transporting orders from one pit to the other.
Okay. You were a runner back then.
Yeah. And then from there, I was hanging out with a couple of guys. One guy was a guy by the name of Jimmy Carey. Charlie Carey was the director of the Board of Trade. And Jimmy inherited a membership and went into the bond pit, was making $200 a week. And then turns 21, goes into the world's biggest futures pit, the bond pit. It had 600 traders, clerks and order fillers. And he started filling John Corzine's business for Goldman Sachs, the Goldman Sachs prop desk,
And you were working for him.
Well, I wasn't working for him. I was working for a guy that worked, his name was Rick Barnes, and he was a former C&D trader, the guy that created the turtles. And I was working for him, and it was just a matter of timing, I think, and what happened was Rick had bought a company at the Merc called LIT. It was a full clearing member of the Merc and the Board of Trade. the guy that I was working for, and he sent me over to the Merc, and that was where I got into the S&P. And you know, out of all the different pits, I mean, the grains, they're great. You know, I can't say anything bad about the grain pits. And the bond pit, that was just unbelievable. You know, that was where Tom Baldwin turned like $12,000 into, or $17,000 into 175 million. It was the biggest future bet in the world. And but when I got over to the Merc, I think what really appealed to me the most was that it had all these different futures markets. You had currencies, you had meats, you had Eurodollars, you had the S&P, you know. So when I went over there, I learned that there was a big difference between what was going on between these two exchanges. And politically, they hated each other. The Board of Trade was known as the Irish Catholic Exchange, and the Merc was known as the Jewish Exchange. And they didn't get along at all. And they didn't get along at all even during that merger. I mean, they hated each other. But go ahead.
So the Merc is what the CME is now, right?
Yeah, the Merc bought the Chicago Board of Trade.
And what was traded on the Board of Trade was
the grains,
all grains.
Yeah, the 10-year
and commodities and stuff.
10-year note, 30-year bond. They had big option pits too. I mean, the back in the day, the 10-year note options would do hundreds of thousands of contracts at a clip.
What about the S&P indexes? That's at the board. I was at the Board of Trade back then.
That's at the Merc. So yeah, when I got over there, I think the thing about this was it was run differently. Over at the Merc, at the Board of Trade, I'll just say like it is. There were no broker groups. And that meant that there weren't any guys upstairs directing all the business that goes into all the pits like there was at the Merc. And like at the Board of Trade, like if you and I were filling bonds together and you did a bad job during the day, and the guy from Smith Barney came up and said, hey, you know, Jeff really sucked today. You know, he just filled the orders terribly. You know, we don't want to pull the business from you, but we want you to start filling more of our orders. You know, those guys would more than likely say no. Now at the Merc, you could be just sitting next to what you think is your best friend, and behind your back, they're soliciting your business. I mean, it was that cutthroat. And not only that, I mean, there were times when I would be in New York and I'd run into these guys and, you know, at the banks. I'd walk into a hedge fund or I'd walk into a bank and I'd say, what the fuck, excuse me, what are you doing here? You know? And the guy would say, oh, you know, well, I was invited here. I said, well, you know, I do this business. I said, you're not going to get that business. And now you're going to lose it because you're sitting in here competing for the business that I do. But anyways, to hasten it a little bit, these broker groups kind of ran the floor. And it was like 4 guys that ran all the business on the exchange floor. And they had brokers in the pit that worked for them, that they worked for a small amount of the brokerage. So what that did was that created this thing where they had to kind of dual trade. And dual trading was legal many years ago, where you could step into the S&P pit and you were filling orders. And I'd say, hey, Jeff, buy 500. And you could look over and go, hey, I'll buy 50. And then go, hey, 10 bid for 500. And then everybody's like 20 bid, 30 bid. And then you're like, buy 50 at 40, buy 100 and a half, you know, that kind of stuff. And then you'd leave the last 50 lot buys out for yourself. And then you'd sell them and buy them back to yourself. They front ran everything. I mean, and that was probably the reason why I didn't cooperate with those brokers. And that's why I got a lot of the business from a lot of the big banks and hedge funds. Because
you weren't front running.
Yeah, well, we were actively fighting for better fills. And instead of the customer saying, oh my God, that's a horrible fill, Danny, you could hear the guys in the background, you know, come on, let's get the fill out of there. Oh, that sucked. You know, we'd be fighting with them. I mean, I was actually I think you know this. I was in a fist fight with a broker in the S&P pit. And
I remember that story.
Yeah. I popped.
Because they were front running and you were trying to do right by your clients.
They were front running one of Marty's orders. And the funny thing about this is that as you recall, back in the day, the multiplier in the S&P was $500. So one point on a one lot is 500. You know, 100 lot is 50,000. You know, 1,000 lot is $500,000. And I was flipping 2,000 and 3,000 lot orders around. So you could imagine the amount of money and slippage and stuff and money that's being made on these orders. It was incredible. And I don't want to say that there weren't legitimate guys in there. There were guys in there that did good jobs. That got good orders from like Goldman Sachs, and there were good firms. But here's the thing with that: I never wanted to work for any of those firms because I wanted to get paid commissions. I didn't want it. I didn't want, maybe I would take it for
as opposed to shaving points, like taking the bid in the ask.
Well, look at it. At the end of the day, let's say the guy from Goldman Sachs is on a $200,000 a year salary, right? And at the end of the year, he gets 150. He gets a 50 grand bonus. I mean, the desk was making sometimes $3 million a month. I mean, or two or one, it didn't matter. But why would I want to get paid a salary versus the commission side of that?
Right.
So, there was a big difference in that. And the thing that it really did, the desk was really separated itself from everybody else on the floor. And, I think that they got used to me going in and out of New York. I always thought that there was no hard phone call that I could make. Really. I mean,
right.
A lot of desks down there, they never called anybody. They were just taking orders. So when you put the trading desk together and you put a couple of really talented people there that know options and know stocks and know, cash, fair value, everything, you create this desk that not only takes orders, but it's creating order flow. Right. And we had a huge order flow. I mean, I think we were talking about this a little earlier. In 2008, Lehman Brothers was over my shoulder. Bear Stearns was to the right of me.
Now, were they clients of yours, or were they?
Oh, we did give up business for them. We executed orders for some of those accounts that cleared there, but the majority of our stuff, we did do retail, because retail, if you took retail, it kept the guys busy when the markets were quiet. Retail always traded. So even though the retail orders were smaller, it still added up to a lot of contracts.
So what was Lehman and Bear looking over your shoulders for?
Pardon me?
Why were they looking over your shoulder?
Well, they weren't looking over my shoulder. I'm just saying that they saw all this business running through the desk. And the reason for that, one, is that we fought for the clients, and they knew that when they met me. They probably, a lot of them had heard of me, doing my hands on the floor. And we did
08 when this stuff was falling apart.
Well, we did everybody's business, Jeff. I mean, I was in and out of Dubai and Abu Dhabi. We did Adia's business. We did Sheikh Mohammed's business. We were doing thousands and thousands of currency options for Sheikh Mohammed. And that was my currency operation. But down in the S&Ps, George Soros, Paul Tudor Jones, Louis Bacon, Bruce Kovner. There were so many different hedge fund managers in there that it was just like GLG. I mean, there's something that was just powerful. So when you get that kind of order flow going through the desk, and you got that program trading line from the Union Bank of Switzerland, and I did, leading in the crash.
Union Bank of Switzerland, UBS.
Yeah, UBS, yeah. And that was really at the heart. That was the beginning of really where program trading started to really flourish. I mean, only represented about 30 or 40% of the daily volume when I first started doing them, But the thing is that it would be like this, I would get a big order, let's say, at the desk. The desk would call up, say it was More Capital, and they'd say, "Hey, Danny,
right,
sell 1,000." Right? The big S&P, so the first thing I would do is I would pick up the Union Bank of Switzerland line, because when you're doing a sell program, you're buying the futures at a discount to the cash, right?
Yeah.
The futures are cheaper than the cash. It's a spread. It's all it is. You're just moving the spread up and down. And when you're doing a buy program, you're offering futures and you're selling and you're buying the cash. You it's a reverse premium. So I would get on the line and this, let's just say, leading up to the 87 crash. I'd jump on the phone And the guy from the Union Bank of Switzerland knew as soon as the phone rang that I wasn't picking up because I wanted to chat. I'd say, Steve, give me a bid. And he'd say, 7.5 on 100, 7.25 on 720 on 100, 7 even on 100, 680 on 100. And I'd just look into the bid and I'd go, sell 500 down to 680. And then all of a sudden the cash would just go kaboom, you know? And really it did. Now, but it wasn't just those orders. I mean, there were other orders that were going through the desk at the same time. In fact, during the 87 crash or the weeks leading up to the 87 crash, we had all those guys. Louis Bacon was good friends with Paul Jones, Tudor Jones. Everybody knows that.
Yeah.
And Bruce Kovner was part of that, those three. So what would happen was Tudor would come in and he'd say, Danny, sell 500. And then about a minute later, Bruce Kovner's line would light up. And then he'd say, sell 400. And then, and then more capital would light up. So all of a sudden, it was all the same accounts pushing the futures down, leading into the 87 crash, right? I had one account in the desk. Every day, Tudor would come in and sell, right? Leading to the days. That was when Elaine Garzarelli was around, and every day these orders would come in. And this was from a different company. It was called Capcom. It was actually it was former BCCI guys that put together this firm in London that was a full clearing member of the Merc and the Board of Trade. And they captured the Royal Saudi family's business on the floor. And we were executing it. Every day leading up, the 2 or 3 weeks leading up to the 87 crash, the phone would ring and this guy would say, hello, Danny, this is Punkage. I'd say, hey, Punkage, how you doing? Hey, Danny, what do you think of the S&P today? And I'd say, Punkage, well, I think they're going to go down initially and then later they're going to go up. And he says, Danny, in this place, please sell 2,000 on the open. So there's no hiding those orders because it's an opening order. You got to get it done in a certain amount of time. I think it was like 30 seconds. You couldn't fill 2,000 in 30 seconds, So every day this goes on, right? And then
they would make the market.
And you got Tudor selling, and you got Bacon selling, and you got Kovner selling, and you got Soros, and you got SAK, SAC, and everybody going through the desk. Everybody. Raj was going through it. I mean, all these guys. And so all of a sudden, every day we start taking these orders, right? And then on the close, another guy would call up. He'd say, Danny, this is blah, blah, blah. And I'd say, hey, how you doing? He'd say, Danny, what do you think of the S&P for the close? And I'd say, well, I think they're going to go up. He'd say, well, in this case, please buy 2,000, on the close. 2,000 lot orders are $1 million a point. And these things were going in the pit. And I'm sure that the guys.
When in 87 was this?
This was the weeks leading up to 1987.
Like October 87.
Yeah.
So you were part of the crash. You were part of the
let me go a little further. This is really where I do think I was part of the crash. But anyway, so Tudor's selling every day, right? And you got Peter Borsch and Tudor, and they're back there and they're selling every day. They're going through all these different desks on the floor. They got their own desk, but they're spreading the orders out, right? But everybody knows that they're calling for this crash. I mean, it was really a very anticipated crash. And so we're selling and selling. And every day we take these orders from the Royal Saudi family. One day before the Royal Saudi family, maybe it was 2 days or 1 day before the 87 crash, they sell 2,000 on the close. No, they sell 1,000 on the close, which was not like them. And then they buy 3,000 on the close. And what it was, Jeff, is that they were short 1,000, and every day what they would do is they would sell 2,000, adding to the position. And then if the markets didn't go their way, they would cover the 2,000 late in the day and then come back and put the 2,000 on. They were timing it right to the T. But what they did is they had, I guess they had, I don't know if they had a margin call or something, something happened. And the clearing firm in London bought the 3,000, flattened them out. So fast, the next day or the day after that, we walk in, it's the 87 crash. The markets are just puking. And now I got UBS on the line. I got everybody selling. And back then, you couldn't do program trading. I think it was down 200 points or 150 points, something like that. But Morgan Stanley was doing programs out the ass behind me. I was doing stuff, but it was being done manually. You know what I mean? And the spreads were gigantic. I mean, you never saw wider spreads. But anyways, so I get this phone call, and Brian and I at the desk were talking about it. I was like, can you believe these guys paid 3,000? He's like, no, I can't believe that, you know? But we didn't know that they were short 1,000 and that they were actually, I mean, we kind of thought it, right? Why would you sell 2,000 every day and then and on the close cover the 2,000? Well, they lost enormous amounts of money while that happened every day, because every day that going up, going up, going up. And especially on late in the day in the closes, then you got these mopes, you know, trying to throw around 2,000 and 3,000 lot orders in there. So anyways, we don't know what their position is. But the day of the 87 crash, the desk is just smoked. I mean, I don't even think there was ever a time like that. You know, as far as like manual orders on the desk, matching, you know, trying to get stuff out of the pit. There were errors in the pit where guys were losing $1 million and making $1 million back by the end of the day in the 87 crash.
I mean, that day changed the market. It changed the exchange.
It changed the exchange, and I think that what it did was there was a lot of blame game going on about why the markets went down, or whether or not program trading was the cause of it or the root of it. But in reality, what happened is that it was very simple. The exchanges were doing record volume, and they weren't prepared for it, and there were breakdowns in some of the systems, and they wanted to point it out somewhere else. You know, they wanted to say, hey, program trading did this. No, not actually, because you know what? It really did supply liquidity in a time when there was no liquidity. It may have been bad liquidity, but it was liquidity, and there was no liquidity.
So what?
So the crash is going down. We're liquidating all this stuff, margin calls, crazy. You know, people are coming down to make sure the desk is all right. I got 7 guys all pumping orders in. I got no idea where this is at. You know, I mean, it literally took all day long to get the cards out of the pit and match all the orders. We were there till 10:30 at night on the floor. We were the last people. Yeah. And anyway, so that day I get this phone call. It's like 10:30 in the morning, 11 o'clock.
This is on the crash day.
Yeah, this is a crash day. The markets are just, and I get this phone call. And one of the guys says, hey, Danny, it's Punkage. You know, I pick up the phone. He says, hello, Danny, this is Punkage. He sounded a little freaked out, you know. And he said, Danny, what do you think of the markets? And I said, they're crashing. He goes, do you think they're going to go lower, Danny? And I said, they're crashing. Yes, I think thirey're going lower. You know, I mean, he said, Danny, in this place, please sell 3,000. I get this order to sell $1.5 million a point in the crash with no liquidity. And, you know, and there was no way to work the order. I mean, I looked up in the pit. I would look up in the pit and I go, I wasn't going to hold any of that. I timestamped the order. I put the order in the pit and I just said, sell 3,000. And that, I just watched the S&P go. I mean, all the way down, just kept going down and down and down. And I'm like, give me a total to like 400. I'm like, 400? You know, and now I know they're in there front running the hell out of this order, right? And finally we get the fill. It's an absolute debauchery, which it should be because they did this. And what it was is the clearing firm in London took it upon themselves to liquidate the position. And when they told me later in the day, they called me. Before I took the order, the guy said, hey, Danny, listen, if the royal Saudi family calls your desk, please don't tell them that we sold 3,000. I'm like, I'm not saying that. If the royal Saudi family, and they used to call the desk, some of their people, I said, no way am I lying. You bought 3,000 yesterday, and you sold 3,000 with a 4%. Figure out the math. I mean, it was millions and millions and millions of dollars. So yeah.
Did any of these people make money that day?
I think, like any crash, once the smoke clears, it regroups, but they literally during that day in the S&P, the clearing firms went down to the floor. Their representatives, they were pulling people out of the S&P pit. If you didn't have a lot of money in your account, you would. But the edges that
What do you mean they were pulling you out?
They were saying, no, we don't want, it's too risky. We don't want you in the pit. So 3/4 of the pit was gone. I mean, they were out of the pit. And then
like
the remainder of these heavyweight guys that could take size. I mean, it would be 71 bids, say. And the guys, an order would come in and sell 500. And the guy would say, sell you 565. And if the print went up and the markets went down, they get screwed. But they get this big edge, and all of a sudden the futures go bid, and they can just go sell 100, sell 100, sell 100, boom, boom. And they make all this money off this, kind of stuff. But the bottom line was there was just a lot of front running. And I think that trading rule, dual trading, and these broker groups on the floor of the MERC, they never did anybody any good. They took advantage of cracks and the, the way the markets worked in the pit.
So what's the take? What's the big lesson learned there about what happened on the floor that day, and what's changed and what's different now? I mean, what did you learn from that?
I learned, and I'll explain that in my next thing that I want to talk about. I learned that taking big orders on days like that is probably not more risk than it's worth.
So just stop trading.
Well, no, but and as I said, I'd like to talk about, the, kind of the 2008 credit crisis, and then talk about the flash crash, and that'll kind of tie this in.
Yeah. So lessons from the '87 crash, tie it up with the flash crash was 2010, and the credit crisis in 2008, right?
Yeah. So, anyways, what happens during these crashes is it doesn't really at the floor level or at the exchange level. What happens is they have all this mammoth liquidation, right? People get blown out. And after that, the markets have to go, they have to rebuild. It takes time. I mean, the amount of volume that we were doing prior to the '87 crash was record volume. But then after the crash, it was just dead. I mean, it just wiped out everybody. So it takes a little while to rebuild that customer base and get everybody. Now that's not the way it is really with the banks or the hedge funds. But I'm just saying that there's a base of customers that get blown out and then they either come back later or they never come back. But it's usually, that's usually the way it is. But anyways, so when I look at the way the markets are going right now, and I know that, you and I would have a great time talking about this.
Yeah.
I don't know that there's a perfect comparison between now and
today, 2025.
Yeah, 2025 or this year,
right,
and the credit crisis. And during the credit crisis, I mean, I remember one of the things that Pitbull said to me, and it was very odd. And I just always listened to him because I knew how smart he was. I mean, he wouldn't say dumb things. Yeah. He said to me one day, he said, there's rotten wood floating around in the brokerage stocks, the brokers and the banks, and then back then the brokerage companies and the stock and the brokerage companies and banks were like the biggest sector of the S&P. I mean,
this is 08.
Yeah, going into 08, it was like a market leader. It was like when those stocks were down, the markets were down. When those were up, they were up. And I remember him saying that, and I remember going into the credit crisis thinking, is this going to be like '87? But it lasted longer.
Why?
And it just took more time to develop. I mean, countrywide, nobody even knew what subprime was. I mean, they did, but no one really knew.
Well, You know, if I could venture a guess, I would think that the '08 credit crisis was longer because the it was deeper, it was more widespread. Where '87 was kind of just a bunch of traders in the S&Ps, you know, knocking one thing
Whacking
on. This
things
was
around.
mortgages, this was credit, this was insurance, this was the firms, the deadwood mortgage talking about. So it was a much wider spread. I don't know, fraud or front running or overextension than it was in '87.
Yeah, I mean, I always said that in 2008, the credit crisis, that there was a party on Wall Street. We didn't get invited, but we did end up, the government or we did end up paying for that.
I guess in the vernacular, it was a much bigger punch bowl in '08
Yes, it
than it
was.
was in
It was
'87.
a much bigger punch bowl.
That got taken
But
away.
what I think, when people ask me about my career on the floor, I think that there have been gigantic highlights and there have been gigantic lowlights. And one of the gigantic lowlights was, obviously standing next to the Bear Stearns operation and watching that implode and watching the Lehman Brothers desk just disappear. Wow, this is stuff that's going on, and it's really brutally affecting the markets. But into that, we did all the AIG business. The AIG book, we executed it all for over 20 years. And we also did Bank of America. Raj had a huge desk with B of A.
Right.
And so in the Fed's infinite wisdom, they literally shut down AIG. They didn't bail out AIG, and AIG just went down. And their book went from thousands and thousands of S&P, NASDAQ, mid-cap, Russell, futures, just thousands. I used to roll 30, 40,000 contracts, 80,000 contracts I do in a couple of days for them at $2 a crack, And as the credit crisis wore on and AIG's units started to shrink down and started to liquidate, I liquidated that book all the way down to 10 S&P contracts. And it was an absolute shame because these guys were good guys. They got blindsided by this. They had no idea this.
Right.
And they'd be calling the desk and they'd be saying, Danny, I'm so sorry to put in, a 10 lot or a 20 lot. And here I'm like telling them, guys, hey, you put in 10 lots for as long as you want. You've been my client for 20 years, paid me hundreds of thousands of dollars, hundreds. And then Raj, and Raj, his desk was as big as JP Morgan's desk. Their big OTC market pricing desk. And he calls me up and he tells me that he's resigning from B of A and that the guys are going to unwind their book and he ends up at Nomura. So these were really critical moments, I think, not just for my desk, but moments in time, where you can see these gigantic, multi-billion-dollar companies just being completely wiped out, and gone, completely gone.
What's different now? Anything?
I think there's more regulation, and I think the banks are kind of looked at higher standards. But I was thinking the other day, how do we know what they have on their books? I mean, there could be something very similar to that going on right now. We wouldn't know, we wouldn't know. Some stuff is off the book, right? I mean, I don't know if they still do that, but that was kind of what took Lehman down. They had these huge off the book positions that nobody even knew about, and then they revealed it, and all of a sudden, literally within a couple of days, they were gone.
But there's all the speculative stuff I see going on right now, like the crypto stuff, the meme stuff, these different things that run. I would imagine, my guess is that it's so much smaller than the types of things you're talking in dollar wise. The what happened in '08 and what happened in
definitely. Yeah.
The amounts of money was 100 times some of the stuff we're seeing.
Right.
No.
I mean, I can't remember what the total amount of quantitative easing that was done by the Fed during that time, but it was like
trillion.
I don't. Was it a trillion? I don't think it was a trillion.
I think it ended up adding up to somewhere close.
I think it was like more 800 billion or something like that. But it could, whatever, but
round up to a trillion.
That's nothing to what they're throwing around now. I mean, but anyways,
But
So
I
then,
don't see any of that stuff going around in the market right now of that level of stuff off, or is there something I'm missing that's off the books that you're talking about?
no, but I mean, the thing is about the S&P, I mean, I always look at volume, and the volumes in the S&P when we were going down, in April, and a little before that, were just going through the roof. 2.5, 3.5, almost 4 million contracts a day. And then as we started going up, and most recently over the last couple of days, I'd say last week or so, as we keep going higher, the volume keeps getting lower. I mean, they're doing like 1 million contracts a day, including Globex. So, you're seeing the market go up, but you're not seeing the heavy buying that we were seeing over the last 2 or 3 weeks before the market really went up to these highs. It's just the volume's not there. And even on a big day on the upside, like a good day would be 1.8 million. Whereas on a really bad day, it's 3.5, 3.5.
And so what are you seeing right now? I mean, I want to. We could talk for a while about the war stories, but in your opening print, you have something called our lean.
Yeah.
So with looking at what we're talking about here with what's happened with the big volume with the April, a tariff tumble we call it, to where we're at now. What's your lean? What's that?
Liberation Day.
Liberation Day. What's Mr. Top Staff's lean right now?
Well, I mean, I'm one of these old school guys that says, we're not here to fight City Hall, right? I mean, if the markets are going up, you want to go with it. So right now, that's where we're at, and I think it's quite shocking that we've rallied this much with so many negatives going on, and especially in the charts that I wanted to show you, we're just like the two-year note, 5-year note, 10-year note, and the 30-year bond yields. I mean, they're going through the roof, and gold has been going through the roof, and the dollar's getting pounded, and clearly we've lost flavor around the world. I mean, today even Canada's Canada's talking to China now. South Korea's been talking to, what I mean? We're kind of falling behind in all this, but at the end of the day, I think that the real problem is the interest on the deficit. You know what I mean? It's just too big to, I don't know, it's like $122 billion a month in interest or something like that.
We kind of messed up not refinancing our own debt when rates were so low, didn't we?
Yeah, no doubt about it.
Everyone refinanced during COVID their mortgages. Why the hell didn't the government?
No doubt about it. And the thing was, in 2008 when they were doing 2009 when they were doing all the quantitative easing, there was that old saying, "Hey, don't fight the Fed." Remember that? I mean, everything was "Don't fight the Fed." Well, no, don't fight the money that the Fed's pouring in. But even then, they were saying, "Hey, they're just going to kick the can down the road. They're not going to pay this thing off." Remember that?
I mean, issued 100-year bonds or 50-year bonds at like 0 interest rates.
Well, the 2%, the yield on the 2% note is like 4.29%. I mean, anyways, I think that there's a lot of problems out there, but we all know that the markets don't always do what we think they should, right? I mean,
right.
And recently, I don't know, is Trump really, is it really the art of the deal, or is it just kind of stumbling along kind of thing now where people are calling his bluff? And then he comes back and says, "Oh, we got a deal," and then he comes back and says, "Oh, we don't have a deal." I mean, I don't know. But
what's your take on the Trump Xi call?
On the Trump what?
The Trump Xi or Xi, how do you say it, right?
Yeah.
The Chinese premier.
Oh, yeah. Well, I've got a friend that was part of Mr. Top Step, and we're not so friendly anymore. He lives in China. And he emailed me today.
Oh, cool.
Well, the attitude right after Trump got elected, and I'm quite sure that he was educated in the United States. He's a smart guy. And the tone back then when Trump got elected was that the Chinese love Trump. They love him. I mean, I heard it for weeks and months. And then all of a sudden, I don't get any emails from him, over the last couple of months. And I had emailed him a couple of times, and I emailed him an article about, the two economies. And then he emailed me back to me, well, the United States has done this, this is this, they started this tariff war, and it's not going to be good for anybody, but it's not going to be good for the United States. They're losing friends, blah, blah, blah. So they know, and they're helping push that theme. You know what I mean? It's a theme that they've been pushing for quite a while.
Is that the most important thing out there on the geopolitical front, the China-U.S. trade battle, or no?
I think it's the dollar. I think that's
doesn't that sort of run together with the dollar being
it does.
impacted by this fallout of our reputation from what we're doing with everybody, right?
Absolutely.
So the dollar, I'm glad you said that, because we put a couple of currency hedges, the euro, the Swiss franc, and the yen on as like hedges against the dollar in our newsletter portfolio. So I think that it's comforting to hear you say the dollar is the big issue, because that's what
I think so. It's the reserve currency of the world still. You know what I mean? How long will it be? And I actually asked Parker Schwartz a couple of years ago about whether, you should be adjusting your portfolio. I've thought, and I don't own any crypto, but I've thought for the last year and a half, I've been recommending to add a little crypto into your,
okay,
you know what I mean?
Good.
In your retirement account. I didn't do it.
Do you like the ETFs with it, or the straight crypto?
I like the ETFs.
Me too.
Yeah.
We're looking to get back into the IBIT ourselves.
Yeah.
Yeah.
And so then the next stage of my career, and you know this story, it was in May of 2010. And, all sorts of things that happened. You can't run a big desk like this and not take hits along the way. There were $1 million hits. And, it wasn't like the 10 million was the first. Well, it wasn't like the big hit was the first hit. And it's hard. It's hard, when you're building the desk up, you're trying to reserve as much money as you can, but not necessarily for the clearing firm if you have a big error to take it, but so that you've got money, you're saving money up. And every time we would rally up, we'd get a big accounts, have a good balances in the bank accounts and in the accounts at the Merc, and then a boom, half of it's gone or all of it's gone. It's just some guy with a currency account in London with $1 million in it, short Swiss franc and yen options, and everything's fine one day, and then 4 days later, he's blowing up the million, and we're waiting on him, money to come in that never comes in. It was a very hard way to live. You can't plan ahead when you're taking big whacks like that. But there was relative calm after the 2000 credit crisis. I think from the low that the S&Ps rallied about 700% from its current high. So obviously we had a big rally. I think it was the biggest. Wasn't it the longest bull market?
From 2009?
Yeah. Wasn't it one of the?
It depends upon where you want to measure your bull markets.
Okay.
From
you would know those stats.
The secular bull from 82 to 2000 might be bigger than the secular bull from 2009 to the present.
Yeah.
But they're all kind of the same sort of. Anyway, it's a big move from 2009.
I think where I'm going with this is that after every crash, there's been a rebuilding period, right? And after every low during a crash, there's always a new high. That's just the way it works.
Yep.
If you're willing to step in on those times, you get paid. And that's really the way you're supposed to make money. Well, especially after this last, 19% drop in the S&P or whatever it was, and the 25%, if you stepped in, you got paid a huge amount of money for being there. You know what I mean? And anyway, so relative calm as the S&P went up at the desk, still building. Electronic trading's taking more minis are trading on the screen. More capital is starting to shift and say, hey, Danny, listen, we love using you for the pit, but more of our orders are going on Globex. So I knew that was going to come. So what I did was I moved the desk down to the S&P options, and put Globex terminals in the desk. We still were taking orders in the pit. We're still doing hand signals for options, and we were doing electronic futures.
That's where I visited you, right?
Well, that was the only way you could survive.
Right. But that was the setup in 2012 when I came on out there.
Yeah. And
but there was something that happened in, go ahead.
Yeah, 2010, the flash crash.
The flash crash. What happened there?
Yeah. Regular day, you know, not seeing anything in particular. I think it was actually a relatively slow day, to tell you the truth. And by about 11 o'clock in the morning, you could see something was going on. It wasn't gigantic, but there was like big selling volume kind of sitting up at like support levels. You know, you could see it, you'd see 1,000, you'd see 4,000 minis trade. You'd see 3,000 minis trade. And it's very similar to what happens a lot of times when you see big sides. Even today and yesterday at the highs of the day, someone in the E-mini came in and sold like several thousand S&Ps. And I went onto Twitter and I said, we're at the highs and this guy's up here selling 1,000 lots and 500 lots. Like, you don't want to be in the front of that stuff. You know what I mean? At least in the short term, you know what I mean? You want to go with that. You don't want to go into that. You know, you don't know how much the guy's got to offer. So sure enough, the S&P sold off, and sure enough, it did the same thing today. I put it out as soon as I saw those orders. So we know that when these big orders kind of inundate the offer side of the S&P, that someone is sitting on it. So in other words, they're not aggressively selling, but as the market goes down, they're letting go of more futures contract, but they're not banging it out. So we see the volume jumping. You know, I mean, there's like all of a sudden 10,000 minis trade in one price. You know what I mean, or two prices, and it's like 1 o'clock in the afternoon, and nobody was really counting anything. I mean, it was just what was on the machine, and people like John at the end of the desk, the guy that ran the options and did a lot of the electronic stuff. Very smart guy. He worked at Spearlead Goldman, and you know, he had an MBA from Loyola. I had smart people at the desk. We had to, and you know, he was yelling at me. He said, "Listen, somebody's dumping," you know, and now it's 2 o'clock, and the S&P is really starting to get a little weaker, but it's not falling hard. You know, it's like the market's absorbing this, and the S&P is coming down, but it's not getting whacked. It's just slowly absorbing these big sell orders. And, you know, the desk is not that busy. And then all of a sudden, like after, I don't know what time it was like 3 o'clock or Eastern time, but I think it was maybe about 3:20. The S&P just accelerated. I mean, like maybe a little
to the downside.
Yeah, just, and all of a sudden, all the phones started lighting up, and all the pits started. The S&P pits started growling. The S&P options were growling. Everybody was pushing. Everybody, and I didn't know what was going on. I mean, no one knew what was going on, and we had a rule, like you said. Well, what did you learn in those big days? Well, here's what I learned. I knew it back then. There was a hedge fund that went through the desk. It was a $90 million hedge fund. He had a 2,000 lot S&P, big S&P put spread on in the S&P option. And he always claimed to be a hedge fund trader from Wall Street, and I always doubted. But whatever, that's a lot of people say that. He didn't seem to have the knowledge of that, but that's whatever. And everybody's just taking orders like mad. And like I said, try to shy away from taking big orders, because
big orders,
right? You don't know what's going to happen. So I look at Brian. I'm like, "Are you all right?" And he's like, "Yeah." I go, "You all right? You all right? You all right?" And I look down the desk all the way at the end. I said, "Are you all right?" And this kid was always suspect. We didn't know if he had a drug problem or whatever, or something. And he's like, "Well, you better come here."
Uh-oh.
Yeah. And so I get up, I walk down the end of the desk. I'm looking down at the desk, and there's buy 2,000, sell 2,000. I'm like, what is that? He said, well, Jonathan unwound his put spread to go naked short into the decline. And when the S&Ps rallied 9% in the last 20 minutes or whatever that was, he lost $100 million. And he said that if you don't fix this order, you're going to be out $9.6 million. Yeah. I mean, how do you fix the order? I mean, and not only that, the trusted guy that was filling the order for me, it ends up they do an investigation. They find out that he clipped $1 million off the order. You know, and here I'm sitting, he's standing at my desk and he's looking at me. He's like, oh my God, I can't believe this happened to you. This is terrible. And, you know, I called the guy up. I said, Jonathan, what's up? He goes, your brokers ripped me off. I said, Jonathan, I said, we threw your position into the span system. We've got it. We've got these positions on our books. You clear part of it with us. And the other part you clear with all these other firms that we don't have agreements for. If you had just not done that and the S&P sold off and bounced back the way it would have done today, we estimate that you would have lost about 1.5%. I go, but you're a big trader from Wall Street and you decide to unwind a 2,000 watt put spread at the low of the day during the flash crash. And you want me to eat the 9.6 million. We did. Wow. We did. And, you know, but here, then again, this is where my survival skills go into gear again. My whole focus now, the clearing firm says, hey, it was part of our fault because we let the account in and we don't want you to leave. So like before when Marty used to call me and when he was losing money back years before this, he calls me up. I can't trade these S&Ps, the Pitbull. And I say, well, I can't remember what year this was. And I knew nothing about crude options. But I can't remember what summer it was, but crude was like $30, $35. I don't know. It's something like cheap, you know. Maybe it was even lower. And I'm looking at it, somebody says, look at the crude, you know, and I'm thinking, crude's cheap. You know, I mean, that looks cheap to me, you know, I mean, and Pitbull calls up, he says, you know, I don't know what I'm going to do. You know, I can't trade these S&Ps anymore. I said, have you ever traded crude options? He goes, I'm an options trader. I said, well, I want to buy the $30 crude and I want to sell the $60 crude. He goes, what do you know about crude oil? I said, I don't know shit about crude oil, but I know that stuff moving and you like stuff that's moving. I shit you not. Over the next 2 years, he becomes the world's largest individual crude options trader on the NYMEX. He was 2010 to 2012. 40,000 contracts a day.
Wow.
He's an absolute nut. And so at the end of that, he calls me up. He says, you know, the crude volatility is too high. I can't do what I was doing before. What should I do? I said, well, I got the S&P option sitting right here. And then so this is a really this is a cool story. $35 million account he opens up with me. I take the flash crash hit. He disappears for a while, right? And I'm not calling him because I got many big other clients in the desk that I got to pay attention to. I can't be paying attention to the Marty shenanigans, right? And he says, okay. He calls me up. He says, listen, I'm really sorry I haven't been calling you. And I'm thinking, well, you're only calling me because you're getting screwed somewhere else, you know? And he says, well, he said, I never dealt with a broker that took a $10 million hit after, you know, I had to stay away and I felt really bad, you know, and I knew you were there and you were struggling but you hung in there, you know, and I want to do some business with you. And I said, okay. He said, send me some account forms. I'll start trading those S&P options. Puts 35 million in the account. starts trading premium selling in the S&P option. I mean, this is a Niederhofer thing, right?
Yeah.
He pumps that account up to $105 million.
Wow.
And he calls me up, true story. He says, what would you do? What would you do if you had all this money? I said, Marty, I take $50 million out. I put it back in the bank. So if this blows up, you still got your 35 million and you got another 15 to go, and you'll still be ahead of the game. I can't do that. It'll cost me 10 million to get out. And I'm like, okay. Well, it was the week of the China PMI. He's trading so many options, Jeff. We got blotters. I mean, he's going in 2,000, 4,000, lot spreads. Do this. You know, he's a premium out, selling dime calls and crazy shit like that, but not just 50, 2,000, you know, selling stuff at 20 cents, readjusting the position with the futures all day. He's just trading maniac. He's trading thousands and thousands a day. So it's the China PMI. I can't remember, it was August of 15 or something. I think it was August of 15. And the S&P is going down all week. And he's calling me, hey, what do you think? What do you think? And I'm like, Marty, I told you. It's the China PMI on Thursday night. And everybody's spooked. They've been selling all week long. So that same phone call comes in on Tuesday. And now the market's going down. So he's getting margin calls and with this huge position on. So he's rolling and he's adding.
He's long.
No, he's short. He's short premium. He's selling calls. He's trying to collect that money. You know, if the market goes up, the calls go to nothing. He collects everything, right? In the puts, on the reverse. And so, you know, all week long. Now it's Wednesday and it's getting bad. You know, now that his equity is lower, he's got $80 million margin call. You know, and his son figured out his position that if the S&P moved like 10% or something, it would be $400 million he'd lose. Something crazy, you know? And so he's all freaked out, you know, and he's like, hey, I should have listened to you. You know, I don't want to hear it though. Don't I, you know, so Thursday comes, market's going down. And he says, I'm getting out. And I'm thinking, whoa. And he lights up the S&P option pit like you wouldn't believe. And they've been waiting for this because they've been sucking wind. He'd been pulling all that money out of that S&P option pit with all those prop traders and locals in there taking the other side of that shit. So now he's coming out the other way, right? And the blotter's filled on the desk. John's just smashed. I mean, there's 60,000 lots on the desk, you know, and he's got to blotter it up and he's got to send it off to the clearing firm to make sure that all the risk stuff is in line. I mean, they're freaked out, you know, they got Marty blowing things. They think it's going to blow things sky high, you know, and he gets out. He says he got out. Cost him, you know, $15 million, $12 million, whatever. I don't know what it was. So China PMI comes in on Thursday night. It's a horrible number. The S&P's opened down 1,000. He's freaked out. He's calling the desk. And I'm like, what's wrong? I got my kids out. I didn't get myself out. I rolled my position down. He gets out. I think it was the day that the VIX stopped quoting on the open. Remember that? So he gets out on the low, literally the low ticks. That day the market smokes higher. He loses $50 million. One whack. 50 million. So then I'm thinking he's just going to quit. You know, I mean, come on. This is, you're sick. I mean, stop. And so he starts trading again. And he runs the account back up. And then he takes a $25 million hit. And from there, it just kind of he couldn't do it anymore. But here's the thing. He did almost $40 million in commission during that time. Paid the 10 off at the clearing firm. You know, they got their piece, we got our piece, and here's where the story comes to a screeching end for me. No one knew about this, but here, and tell me if I'm wrong. You lose 40 million, you lose $10 million, and you get to come back and pay it all off and walk away with a big chunk of money. Do you stay there? Do you stay doing that? I said to myself, no way am I putting myself back in those shoes again. It was total torture. I mean,
walk away.
Well, just the period of time from the flash crash and owing $10 million to 3 or 4 years later to getting it all back. And I didn't tell anybody. And I elbowed my partner on the desk and I'm like, Brian,
I'm out.
Yeah. I elbowed him like 3 times. And he's like, where are you going? You're going to the Merc Club? You're going to the doctor? You're going to the Palm restaurant? Where are you going?
Florida.
I said, I got my bag out there. I said, I bought a home in Delray. I'm never coming back. And I never did. I never did. And here's the other part about it. He kept trading. So now I'm down in Florida and I'm not working on the floor anymore. It's my company. So I'm still getting paid. You know what I mean?
Yeah.
It was great. So I guess the moral to the story is that in some ways that a lot of people would give up, you know, and this has got a lot to do with trading too. You know what I mean? Some people just aren't meant for trading. They're just not, they're not geared for it. But I think within all good traders that there's that kind of fight back kind of thing. And that's really what I learned on the trading floor, that if you didn't fight back, someone would steal your business. Someone would push you out of the business. And that's what I did on the floor. I mean, and I think I honestly believe that I did a good job, you know, and I wouldn't have gotten all that business if I didn't do a good job. And it was exciting. I traveled around the world. There were very many, I can't even tell you. I was in banks in Luxembourg. I was in banks in Switzerland. I was in, you know, the world's largest investment firm in Abu Dhabi. You know, I mean, I traveled the world. And I think that the experience at the end of the day, for a guy like me who never really got an education, I mean, I got a street education and I got a floor education, but I used to look back and think, God, wouldn't it have been great if I got to go to Notre Dame like my brother? And then I think to myself, no way, no way. I mean, there's no way. And again, kind of like what I was saying in the beginning, there was really no place, no career in the world where you or I could walk on the floor and have so much upside. And it wouldn't matter if you were a plumber or an electrician or a local politician, whatever, and lawyers, it wouldn't matter. They were all in that pit, you know, and it was a great opportunity to come out of there ahead. I was lucky. I mean,
we're lucky to have you educate us and all that.
Yeah, well, I mean, you know, we also saw what was going on. We're getting ready to launch a trader funding company, and I look back at that, and I remember, like in 1996 when they launched Globex, there was a lot of traders that not too long after, like in the Eurodollars in some other areas, left the floor. They quit. They thought that the floor was closing, you know, right away.
So what's the trader funding business?
Well, it's a model where it's a model where you sign up for our program. There's a lot of like sketchy businesses out there. We modeled ours around trader education and stuff like that. You know, like if you take our program and you pass the test, we will fund you with real money.
So how do people find out about that?
Well, we haven't launched yet, but there's a lot of companies out there that do it. I mean, I'd like to. My company's called Pitbull Trader, pitbulltraders.com.
Okay.
And we're probably within about a month from launching. It's a huge business. It's a huge industry business that a lot of people don't know about, but it's really more on the retail side. But there's a couple of companies that, you know, like the people that stole my name in Chicago, they've got 35 or 40,000 people online, and there's a company called Apex that has over 45,000 people online every day, and they're trader funding. And but the models change. So with the model, you know, they used to say, well, only 95% of the people, 95% of the people lose money trading. Well, that was what it was years ago when this trader funding stuff started to open, but now it's 80%. And you've got to have a lot more stricter.
So what are you going to do? What are you doing differently that it's going to help people make money?
Well, when people blow out, instead of just letting them blow out, we're gonna send out emails to them and say, look, we got different educators or trading coaches that teach, you know, that teach different, like say market profile or different types of technical analysis that we could try to insert ourselves in. But at the end of the day, you know, somebody said the other day, look, you can train these people as much as you want. They're going to still go do their own thing. You know what I mean?
I guess, I mean, my wish would be that you would convey the lessons that you were talking about from these crashes and these crises to these traders to manage their positions, you know, more sensibly during these volatile times, to have smaller positions. I mean, this is what we do, half positions. We take our time getting into things, and getting out of things. It's you got to be more patient.
Yeah.
Sometimes you got to know when to sell, but
no doubt about it, especially when you're trading the S&P. If you're not patient, you just get blown up. But
in the meantime, you've got mrtopstep.com, and that is different than this trader funding, but I assume that's going to have some connection. What's going on in Mr. Top Step right now? Is there still a trading room people can get in there?
Yeah, we still have the trading room. There's like 3 different companies or 4 different companies that have their rooms with us. And you know, look, I think these chat rooms chat rooms were a big thing back years ago, but they're not so big anymore because they've got all this stuff in social media. You can go into all these different, you know, forums and stuff. But I would say the one thing about our forum is that there's a lot of guys in there that have been trading for a long time. They're not young kids. Some guys have 10 million bucks in their accounts, so it's not, you know,
right.
There are guys in there with 25, but you know, these are seasoned traders that are in there looking for flow. You know, when you have that many people online and you have the news going, you generally somebody will catch it. And then we have Live Squawk London. I don't know if you've ever listened to that. They pipe out the news through the chat room during the day. I don't really watch. I think I watched you on CNBC, but I usually don't turn the TV on during the day. It seems.
What are you trading? What are you trading yourself these days?
I really just trade the S&P and the NASDAQ. And
just during the day, you're flat at the end of every day.
Yeah, I mean, if I've got a lead on something, I may hold something, you know, or try to hold something.
I mean, you tell people what you're doing in the opening print pretty much, and in the trading room. So I think that's probably so for somebody who wants that, they just go to mrtopstep.com and subscribe. You can get the opening print and then
and you know, one of the things that we do, you know about this, Jeff,
the MIM.
A lot of people don't pay attention to it as much, I guess, or they don't really know about it. But this is a New York Stock Exchange imbalance that we get every day at 350. And that used to be pumped out to all the trading desk all over the place.
And what does it tell you?
Well, it's the total net of all the buying and selling on the New York Stock Exchange at 350.
All the different stocks. It's not index.
I mean,
it's
I think you can see this.
We can see it a little bit.
Yeah, well, but
this is on your website, right?
Yeah. So today it was 773 million to buy, but the Nasdaq was so weak. We also get the Nasdaq imbalance. It was only 271 million to buy. The S&P was 761. The NYSE was 542. So you've got, and then what you can do is you can add them all up, and that adds up to 700. But anyways, you know that as well as I do, that there's a lot of the volume is printed in the first and last hour, right?
Yep.
And I still think that the latent day stuff is always tied to what.
So that's the most important, the last half hour of the day.
Absolutely. Well,
I mean, even though everything's are 24/7 these days, it's still most of it's 3:30 to 4:30 New York time.
Yeah, but
so what's that telling you? Those numbers?
Well, I mean, they don't necessarily, just because they're to buy doesn't mean that the S&P is going to go up. But what these numbers are show, basically they're different. The different sectors. Materials were 3.2 million to sell. They had 26,000 shares sold. Healthcare was 11 million to buy. They had 466,000 shares to buy. So it's a breakdown of all the different stocks that are being bought. But is there a takeaway? Well, I think there is. I mean, I always say, if you want to know where the S&P is, follow the money. It's been a little more difficult with this move down and move back up, because even after the low in April, we still saw a lot of selling on the MOC. But I think that was
the close.
Yeah. So it's hard to figure out, but we did have one MIM the other day. I think it was the largest one we ever saw. It was by 11 billion. And the S&P was, I think it was 11, and I think there was a $7 billion one, or whether it was 7 billion. I can't remember. But on both occasions, when these huge imbalances came out, like the $7.2 billion one, the S&P rallied 30 points. So I was already late in the day, you can kind of see like how the bids are coming in, they start to firm up a little bit. You can see the volume coming in.
So this rally is not yet exhausted.
Right. And if the S&P is like fluctuating late in the day, but it's not really going down, and then you get a big buy like that, well, all of a sudden the S&P rallies 30 points. So I was actually long before that. Then all of a sudden out goes 7 billion and the S&P goes flying up. And it sometimes it's a very good indicator for what's going to happen in between 3:50 and 4 o'clock. And then, like on the 4 o'clock cash close at 3:59:30 is when all the, they can cancel orders and put orders in before that. So there's all that kind of stuff. I always watch 3:59:30 every day on the cash close, because something's always happened, and there's also something that's going on that people don't talk about, Jeff. After 4 o'clock, there used to be no trade in the S&P. Now, I wouldn't say it's so much right now, but when we were going down over those several weeks, there was huge trade after 4 o'clock in the afternoon. Yeah. Sometimes the S&P would move 50, 60 points, but you never used to see that kind of stuff. After 4 o'clock, it just goes dead. But
so listen, man, this has been a great chat. I want people to know that if they want to get your insights and inputs, they can go to MrTopStep.com and get your opening print. I get it in my email, go into the trading room, and listen in and learn something if you're going to be trading like this. So hopefully we'll see each other in person sometime soon.
Yeah.
In the meantime, it's been great. Appreciate all the stories. Lot to learn there, man. So thank you, D-Boy.
There was a guy on the trading floor. His name was Harry the Hat. He was my sponsor. He used to say, every day is a holiday, every meal is a feast. And we'll close it out like that.
Right? That's perfect. All right. Thanks, Dan.
Good seeing you,
everybody. Once again, I'm Jeff Hirsch for WealthWise and Biz Talk Today TV. Available wherever you get your podcasts. Check me out on social media. Google me. Go to StockTradersAlmanac.com and take out a free trial. Check out my newsletter. And also hit up Danny at Mr. Top Step.
Thanks, Jeff.
Happy Friday, everybody.
Peace out.